I'm Andrew Mersine, producer for FinTech TV, and Taking Stock starts now.
Could have fallen out of the bottom.
2 minutes to go here into the close, and at this hour, it may not feel like it, but the S&P 500 is expected to finish down 1%, and I say may not feel like it because it could have been far worse. Let's bring in the Einstein of Wall Street, the great Peter Tuchman. What did you see into the close for a day where we said a lot of uh-ohs at the open earlier today?
You know what, I think this is very technical in a lot of ways. First of all, we're in the beginning of a new month, a lot of new money allocations coming in. People are looking for buying opportunity, and we know that pullbacks, sell-offs, consolidations are those times. We hit couple levels that we haven't seen since November, S&P and the VIX. VIX hitting at 27.5 level, and also the S&P 67 level. So we bounced off those levels technically beautifully. And then obviously we're being bound by the news, right? At a couple of points, you know, obviously the news that came out about the president escorting the boats through the Gulf of Hormuz, the Straits of Hormuz was huge. And then obviously, I think a lot of the anxiety today was about the fact that Lloyd's had backed out on insuring all of these boats. The president stepped in and decided to back it with insurance and with, you know, and following the boats through. That's huge news. I mean, I would say it's an incredibly constructive day. It shows that people are not scared to get back into this market. They understand the fears and anxiety around war, but they understand that this market has a lot of resilience.
All right, the great Einstein of Wall Street, the one and only Peter Tuchman. Thank you for kicking us off. As always, Blake will take your microphone, and at this hour, we are expected to see the indexes finish in negative territory with the S&P down 1%. MVVO Art here at the Stock Exchange. Time for the bell. Officially bring about a close to today's trading session. It was a wild one here on Wall Street. Your final tail of the tape on this trading Tuesday afternoon. The S&P 500 will sell off about 1%, 0.94. The Dow down 0.8. The NYSE Composite Index down 1.7, and the small caps right in line with the NYA. The Russell 2000 down 1.8. Gold and silver both lower on the day. The dollar moving higher here on Wall Street for a second consecutive session. The oil benchmarks moving much higher, paring back some of those early day gains here into the close. The crypto majors down as well. Some strongly performing sectors include financials and fintech, but a lot of downward sell pressure for healthcare and biotech stocks, the home builders, the semiconductors, and many more. Salesforce having a strong day, as is IBM and Verizon. Those are your three strongest names in the Dow, and your three Dow laggards, Caterpillar, Boeing, and Nike. Phil Rosen Tuesday, time to celebrate our unofficial holiday. Phil Rosen, co-founder of Opening Bell Daily, also host of Full Signal. Thanks for being here as always, my man.
Thank you, JD.
So, I mean, for a day where we opened up the market, the S&P was down about 2%. I mean, we had a lot of red. We still have red on the big board, but it feels as if things alleviated quite a bit into the closing auction. What happened today?
You know, this sell-off with the geopolitical scare with Iran, this is actually way less severe than what we saw with the Citrini sell-off, which was the fictional AI report from the future. And if you think about that, AI is the new macro now. Even the geopolitical scares and the very real tensions in the Middle East is not enough to knock this market off as much as something like fan fiction in the AI space.
Yeah, wasn't that amazing last week? You know, I was on vacation, so I wasn't here covering it, but I was reading it from abroad. But it does speak, though. You know, how are you approaching the broader jitters of the market? If it's not the AI concerns, it's these pieces on social media that rock markets, and now something a bit more tangible, a lot more tangible in the lens of politics. What are you going to be looking for as the story in the Middle East continues to unfold?
I don't know what to expect geopolitically, but I do know the biggest winner sector-wise in the S&P has been energy. I think it's up 27% this year alone. And my sense is that all of that came from AI, all the power demand that data centers are going to demand in the next year or two. That's all driving energy much higher. But the sudden bull case for energy, I think, is coming from the war side. So any restrictions in supply chains or oil shocks, that is actually very bullish for energy in my view. So suddenly you have this AI thesis driving energy much higher, but now there's a new bull case layered on top of that, which is the geopolitical factor. So that's something I'm watching right now.
Is there an inflation concern for the central bank to keep its eye on as we continue to say, hey, it's one thing to say, hey, it's all well and good for oil and energy stocks to do very well, but for the price of oil itself to impact day-to-day consumers who still need to fill up their tanks, we're going to be watching for the price of gas across the country, and then that brings the Fed back into the equation.
I would say it's likely that the Fed is going to be more hesitant to cut rates at the coming meeting. I think odds are down maybe 15%, so about 40% still. So it's almost a coin flip. And we'll see how long the Iran troubles last. I'm not sure if it's going to be multi-weeks, it could be months, who knows. And if it's prolonged, we could see oil get closer and closer to $100 a barrel. And that would probably have some inflationary pressures. But if it's a very short, contained situation, then inflation, I think we can kind of kick down the road as a concern.
Yeah, at least the White House put in a timeline. They say 4 to 5 weeks. Anything could happen, anything can unfold. Before I let you go, where can people go if they want to find more about your work for Full Signal, Opening Bell Daily, and much more, Phil Rosen?
Every morning I write the same newsletter, Opening Bell Daily, and it's free 5 days a week, and that's where you can find me.
Yeah, absolutely. Top stories and themes before I let you go that you're covering this week in that newsletter.
Energy. I just said it on air. Energy is the biggest thing that I'll be watching right now. I'm always looking at small caps, but for this week, energy.
Yeah, of course, and small caps having a day down 1.8%, but it's a fascinating storyline. Small caps, the Russell, much more for 2026. We'll have to have you back. Let's do it again next week.
Anytime.
The great Phil Rosen here kicking us off. Here, I'll grab your microphone, my man. Thank you for being here. Todd, you and I will head backwards. Here are some of the biggest analyst calls hitting Wall Street firms today. First up, Rosenblatt reiterating Palantir as a buy. They say Palantir is actually a beneficiary of ongoing military action in the Middle East, writing, quote, war regrettably underscores the value of Palantir, the firm boosting its price target as well from 150 to 200. Next up, Wells Fargo reiterating Palo Alto Networks at overweight. The stock is already down 15% here in 2026, but analysts say it's kind of a bit of an attractive entry point for the cybersecurity giant. And finally, Oppenheimer reiterating Netflix as outperformed now that that potential deal with Warner Brothers Discovery is pretty safely out of the picture. They say Netflix has room to run. The stock is up almost 30% in the last week, up 3% here in 2026. We'll continue here with some analyst coverage notes for NYSE notables. We got to start with ticker symbol RACE. That might be the coolest ticker symbol here at the big board. That's, of course, Ferrari, down fractionally, but JP Morgan reiterating Ferrari as overweight, boosting its price target from 407 to 447. Not enough to help shares, however, down about 0.5% after falling 4.5% in yesterday's session. And how about Target? We've been wondering all day, where is the money rotating to here on Wall Street? Because it didn't go into bonds, it didn't go into tech, it certainly didn't go into metals and crypto. And I kind of said, how about Target? Look at TGT having a really strong day. Not a lot of companies up in the green. Target up almost 7%, despite a slight miss on revenue. They did report strong earnings numbers and a strong boost to guidance for 2026 as well. Shares of Target continue to be the big retail outperformer, up 24% so far here in 2026. All right, UC Berkeley professor Saikat Chowdhury joined Lance Glynn on NYSE Live to discuss all the ways that artificial intelligence is changing and impacting the job market. Take a look.
Joining me now is Saikat Chowdhury, Innovation Strategy and Engineering Professor at UC Berkeley. Saikat, thank you so much for making the trip cross country. So happy to have you here on NYSE Live.
Great to be here. Thank you for inviting me.
Yeah, you could have brought the nice weather with you when you were coming over from California, let me tell you. But first, I want to start just what challenges and opportunities really exist for companies navigating this AI disruption? Because we hear about it every single day. So how are companies reacting and how are they sort of navigating this landscape?
Yeah, I think there's a lot of confusion out there and we hear a lot of negative news, job losses being primary amongst them. I think companies, especially established ones, are struggling a little bit. I mean, one is they can't keep up with the technology and the models. So much is happening all day. But at the same time, I think they're struggling on how to use it, right? Every investor asks them, what's your AI strategy? Which I think is kind of foolish because the real question is, well, it's a tool. What can you do to change your business enabled by AI? One is the data side. They don't have the data to actually make it work. But for me, the bigger challenge is strategic and organizational. What will my firm look like in the future? It's not just about eliminating jobs or automating tasks. It's really about figuring out how can I transform my company? So that's really the biggest challenge that I think that executives are facing.
Yeah, I think it's executives as well as those looking for jobs, right? How is this technology going to impact the job landscape in the future? And to that, what impact is AI having on this job landscape and the skills that employers are looking for?
So from my perspective, I'm actually more optimistic on that landscape than pessimistic. When the internet came, everybody focused on brick and mortar and how jobs were getting decimated. The internet created more jobs than ever before. It's hard for people to imagine what new things can be created. It's easy for them to imagine what will go away. So I think the same thing will happen here. I can't even tell you all the new jobs that'll be created. The skills that we need, though, are not just well-defined technology skills. Coding and the like is obviously going to be shrinking, but we need judgment, we need consciousness, we need prioritization. So if you think about it, an insurance company has to reinvent itself. We can do all the investments, we can do things like figuring out premiums pretty easily, right? What's the actuary going to do? It's all about, oh, well, now I can give you spot insurance. If you want to go to Lake Tahoe tomorrow with your friends and you do medical and car rental and lodging insurance, I can give you that in half an hour on the spot, customized to your needs and your people. That's how we have to think about it. And then it creates new possibilities.
And so what role do universities like the one that you teach at UC Berkeley, what role do they play in really driving entrepreneurship and innovation around AI and how it's going to grow in the years to come?
I think both on the research and technology development side and on the education side, right? On the technology side, I mean, LLMs and so forth, right? If you think about it, Berkeley helped co-found, OpenAI, as well as Perplexity is also our alum, right? So that's where that stuff came from, right? And other areas like life sciences with Jennifer Doudna, that's the case also, or in materials, carbon, and so forth, right? So that's one side of it. Research, we're in a deep tech world again. We're not just applying things. The second, though, is education. We have to prepare our graduates to really be prepared for thinking about critical, analytical problem solving. It's about defining the landscape and then taking the approaches. Use AI as a tool and not, just go and do basic coding.
So let's say I'm a student. What questions am I asking the most when it comes to not the future of AI, but just the future of work with obviously AI playing a major disrupting force in it?
So the question, I think the most elementary question is, how can I get a job? And I read through all this out.
Even before AI, I feel like we were all wondering. I remember back in my student days, I was wondering, how do I get a job?
We were all wondering that, right? Absolutely. But the second question becomes, what are the skills that are going to be important for me? What do I need to learn? What I tell them is learn statistics and math, even if you're doing computer science. It's not a bad field at all, but don't just focus on the coding part, right? But I think it's going to be a renaissance of the liberal arts. I think that whether it's the philosophy side, the writing side, when it comes to analytical problem solving, quantitative, qualitatively, that's all going to be coming back as well. That's what we need, both because of the deep tech nature of what we're facing, but also because that's the part the machine can't do yet. We've seen it before. I mean, think about mechanization of farming or something like that, or industrialization. All that's happened. We've upped our game, and so that's what's going to happen now too. I guess the other question people ask is, how can I get an A? So I tell them, use AI.
Use another question I'm asking every day while I was in college.
Absolutely right. We all were. And back then, what used to be an A-level paper is now going to be something which is, everybody can do using ChatGPT. I'm a professor who tells people, use all the technology you want. That just became a nice draft, and that became a nice standard B-level paper. Now use your brains in order to do the exciting part. Let's level up.
Saikat, I really appreciate the conversation. Saikat Chowdhury, Professor of Innovation, Strategy, and Engineering at UC Berkeley. Thank you so much for joining us today on NYSE Live.
It's been great being here. Thank you, Lance.
Let's do it, folks. Welcome back to the show. You're watching Taking Stock. Time now at this hour of the show for the latest headlines in the worlds of startups, raises, and rounds for your Tuesday afternoon. First up at this hour, Bloomberg reporting SpaceX prepared a confidential IPO filing as soon as this month, potentially values the company at more than $1.75 trillion. Yeah, that does make it the biggest would-be IPO of all time. This as Elon Musk's xAI moves to clean up its balance sheet by buying back $3 billion of high-yield debt ahead of the expected public listing. Next up, Anthropic's chatbot Claude overtaking ChatGPT to become the top free app on Apple's U.S. App Store. This comes as sign-ups surge following the company's high-profile standoff with the Pentagon over military use of its AI models. And finally, developer cloud platform Render raising $100 million at a valuation of $1.5 billion, saying the capital will help it build a unified cloud runtime for AI applications and agents. This as demand surges from millions of developers. Speaking of Render, I am now joined by the firm's CEO, Anurag Goel. Anurag, it is great to have you joining the broadcast remotely. First and foremost, we just brought our viewers the latest news there a few moments ago, but give us more of a holistic view, an introduction, if you will, to Render for anyone a bit unfamiliar.
Certainly, and it's great to be here. Thank you for having me. Render is a cloud platform for application developers, the people who are actually writing the code, for them to be able to deploy their applications, to run their applications in the cloud easily, quickly, reliably, and to build agents and AI native applications using all the capabilities that Render provides to them out of the box. And we have nearly 5 million developers on the platform now, and almost 300,000 developers joining every month. And we've quickly become one of the fastest growing developer clouds in the world. And a lot of it is being driven by more and more software being created by AI and by people using AI. And on the other hand, the hyperscalers like AWS and others remain too complex for developers to be able to deploy the software online quickly and easily. So that's where providers like Render, and certainly Render being the leader in this space, that's where we come in and help these developers with their applications and make sure that they're always available, reliable, and secure.
Yeah, talk to me a bit more about the pain points that all of these scores of developers are coming to you with. What are those bottlenecks, the complexities that you most feel Render can remove to help a lot of your clients?
Yeah, so it's become easier than ever to write code, as we all know. The problem that people run into once they've written their code is how do I make sure that it runs online the same way I run it locally on my machine? How do I make sure that it can scale with additional demand? How do I make sure that it's secure, that I have, how the browser says this page is SSL certified? How do I make sure all of that is automated? How can I give my team members access to work on this with me in the cloud? And then how do I observe what's happening with my applications? So all of these concerns become really, really important as soon as you start having real users and real scale. And we've seen that companies that start out on Render, when it's just the founders, are able to scale with us to millions of users. And a great example of that is a leading AI coding platform called Base44. The founder started it on his own, and he started running it on Render, not AWS, not Google Cloud, because it was the easiest way for him to get it to production. And it's still on Render, and it's been a great journey for them to go from the single founder building this coding platform to most recently running an ad in the Super Bowl as part of Wix. If you were watching, Base44 had an ad there, and Render supported them throughout the scale and continues to support them.
Anurag Goel, CEO of Render, congratulations on all the success, the work with those scores of developers. Come back onto the broadcast anytime. It is really good to have you. Folks, don't go anywhere. Much more Taking Stock coming up live from the iconic New York Stock Exchange right after this. Welcome back to the broadcast. Not only is Tarun Chitra the founder and CEO of Gauntlet, but at this hour live at the iconic New York Stock Exchange, so you can see for yourselves, he's also the best dressed man down here on the trading floor. Thanks for being here. Nice to have you.
Thanks for having me.
Thanks for wearing such an awesome, here I am. I think I got to like dress up for the show, and no, you're putting me to shame. I appreciate it. That's awesome. Where do we stand on protecting stablecoin yield? A huge conversation for would-be investors, for the industry as a whole. The work of you and your colleagues at Gauntlet, you play a pretty central role in how those conversations are unfolding.
Yeah, so I think the interesting thing right now is like everyone is focusing on congressional fighting between banks and crypto companies over where yield goes, but there's a whole nother form of yield in earn programs, which are ways that neobanks and fintechs are offering yield directly to their users outside of the banking system. And that yield has been growing dramatically over the last few years. It went from sort of $0 around the time we started, February 2024, to around a peak of around 14 billion last year, and now it's sort of in the like $8 to $10 billion range. And a lot of people are predicting that it's going to grow a lot this year because a number of institutions, everyone from Apollo to Fidelity to Bitwise, have said that they're going to be joining this endeavor. And so that's where we see the future going. I think a lot of asset managers who are afraid of crypto see stablecoin yield as the future.
Sure. What is, correct me if I'm wrong, Falcon X Vault? Did I stylize it the right way? Falcon 10, Falcon X. Mm-hmm. What is Falcon X Vault, and what does it show us about the state of real-world assets right now?
Yeah, so a lot of lending in crypto, like where's the yield coming from? It's from lending activity, right? There's people who want to earn yield, they pull together their stablecoins. There's people who want to borrow against some assets, and they want to borrow stablecoins. And, compared to the normal world where lending has a lot of friction, when you open a credit card, you have to fill out a form, you have to wait till they approve you, whatever. Stablecoin lending is instant. It's like I put up collateral, I get a loan immediately. And so that kind of UX has been really popular for people who understand how to use it. But it hasn't really worked for a lot of people because their assets aren't crypto assets, right? Like, most people in this room probably own assets in stocks, in real estate, in other things. And for them to borrow against it, they have to go to their bank. And what DeFi has kind of evolved to, decentralized finance, is it's been able to start taking real world assets and lending stablecoins against them. So you could imagine you get a home equity loan immediately. You get a loan against your stock portfolio immediately. And it's much more seamless. And that's sort of the world, the direction the world's trending in.
I got less than a minute left. In what ways, if at all, has crypto volatility scared off institutions? Ironically, coming at the time where we talk so much about institutional adoption.
So I think the interesting thing is there's institutions who are trend followers and there's institutions who are looking for a deal. And I would say the institutions who are looking for a deal are really interested right now because they see the stablecoin yield market growing despite the volatile crypto prices. And sort of the traders and sort of more speculative trend followers, they're sort of out. And I think it's never like there's no institutions. It's just like there's a changing of the guard. And the changing of the guard right now is safe yield, yield for your grandmom. Yield that anyone can feel comfortable with, and sure, less, meme coin high volatility.
Yeah, the worst part about this interview is that I have to end it because we have blocks for a live TV show, and I don't have any other time. But please come back anytime. Love the conversation. Big fans of the work you do at Gauntlet. Congrats and thanks for being on the show.
Yeah, of course. Thanks so much.
Don't go anywhere. A lot more Taking Stock coming up after this. Welcome back to the show. Time for a few headlines in the worlds of fintech, crypto, and AI you need to know for your Tuesday afternoon. First up, the crypto majors, Bitcoin, ETH, and Solana. They're all down. The hardest hit is Solana, down 3.3% as of the 4 o'clock hour here on Wall Street. Next up, JP Morgan analysts say the U.S. Crypto Market Structure Bill, also known as Clarity Act, also known as the thing we're talking about almost every day here on the show, could win approval by the middle of this year and therefore become a major second half catalyst by bringing regulatory clarity and boosting institutional participation. However, JP Morgan CEO Jamie Dimon says stablecoins that pay yield should face, of course, in his estimation, the same capital, liquidity, and FDIC-style requirements as traditional banks. He is calling for what he calls a level playing field as lawmakers on Capitol Hill debate the future of crypto market structure. And now Money 2020's very own Scarlett Sieber is back with a new edition of Jargon Translator, putting complicated, wonky fintech terminology into everyday usage that you can better understand. Take a look.
I'm Scarlett Sieber with Money 2020. Welcome back, and we're going to be here talking to you about prediction markets. I predict you are hearing a ton about prediction markets everywhere you turn right now. Left, right, it's all around us. I hear that there's a market being made right now on how many times I'll say market size on this segment. If you have not heard, ICE, the owner of the New York Stock Exchange, which is where we are right now, is either preparing to invest or has already invested $2 billion USD into Polymarket, the world's largest predictions market platform. This is one of those reading between the lines moments. Is ICE investing because maybe this will be a thing? Are they investing to ensure they didn't miss the boat? Or are they investing because prediction markets have potential to be even bigger than equity markets themselves in a decade or two? Let's break down what exactly these markets are, how they function, why ICE is stepping in, and how the business actually makes money. What is a prediction market? Is it as simple as it sounds? A prediction market is a marketplace where participants buy and sell contracts tied to the outcome of a future event. Elections, economic data releases, even pop culture or a sports event. Most contracts are binary, yes or no. They trade between $0 and $1. If the event happens, yes, it pays $1. Otherwise, it pays $0. Why are these prediction markets getting the ultimate blessings, i.e. the ICE knighthood? According to Reuters, ICE is now pushing to take a major stake up to $2 billion in Polymarket, valued at about $8 billion pre-money. There are also 8 billion opinions on that number, as I'm sure you can imagine. It's clear that ICE is not dabbling. It's going all in and moving first, playing offense. We will do a deeper dive on this report in our next segment as we start to untangle the future of the predictions market. In the meantime, that's it for now. There's a lot more to come. Back over to you on the floor.
At the close. Tomorrow on Wall Street, we will get the finally highly anticipated ADP employment print for the month of February. That 2 days ahead of Friday's jobs numbers from the Bureau of Labor Statistics. We'll also get earnings results in the morning from Abercrombie, Wix, and Bath & Body Works. And at the close, Broadcom, Okta, and American Eagle. Thanks for watching today's edition of Taking Stock. Have a good one. We'll see you tomorrow. Woo!